Hi. Welcome to Business Nexus. This video about the financial crisis and its impact on the business. My name is Nishan. The financial crisis of 2008 was a significant event that shook the global economy. The crisis was triggered by a combination of factors, including the easy availability of credit, the proliferation of subprime mortgages, and the creation of complex financial products, etc. These products were based on a large pool of mortgages that had been bundled together and sold as securities to investors worldwide. When homeowners started defaulting on their mortgages, the value of these securities plummeted, leading to massive losses for investors and financial institutions. Many people don't know that the financial crisis had a significant impact on businesses as well. As credit dried up, many companies found it difficult to obtain the financing they needed to continue their operations. Smaller businesses were particularly hard hit, as they were less likely to have the financial resources to weather the storm. The financial crisis also had a ripple effect on the global economy. As businesses and consumers cut back on spending, demand for goods and services decreased, leading to a decrease in economic growth. The crisis also caused many people to lose their jobs, leading to a rise in unemployment rates. In response to the crisis, governments worldwide took action to stabilize the financial system. Central banks lowered interest rates and injected liquidity into the financial system. Governments passed laws to regulate the financial sector and prevent similar crises from happening in the future. Overall, the 2008 financial crisis was a wake-up call for businesses and governments worldwide. It highlighted the dangers of unchecked financial speculation and the importance of responsible financial regulation. It also showed the interconnectedness of the global economy and the need for coordinated action to address systemic risks. As more and more people defaulted on their mortgages, the value of these mortgage-backed securities and collateralized debt obligations plummeted. Investors who thought they were investing in safe assets found out that they were actually investing in toxic assets. This caused panic in the financial markets and led to a widespread loss of confidence in the banking system. In the United States, this led to a freezing of the credit markets. Banks stopped lending to each other, and this meant that businesses and individuals were unable to access the credit they needed to operate. This led to a severe contraction in economic activity, which caused widespread job losses and a significant decline in GDP. But the impact of the financial crisis wasn't limited to the United States. It had a global impact, and countries around the world experienced the effects of the crisis. In Sri Lanka, for example, the financial crisis had a significant impact on the economy. Sri Lanka had been experiencing rapid economic growth in the years leading up to the crisis, with GDP growth rates averaging around 6 to 7% per year. However, the financial crisis led to a decline in Sri Lanka's exports, particularly to the United States and Europe, which were major markets for Sri Lankan goods. In addition, the crisis led to a decline in foreign investment in Sri Lanka. Investors were hesitant to invest in emerging markets like Sri Lanka, as they were seen as riskier than more established markets. This meant that Sri Lanka had less access to the capital it needed to fund its economic growth. The financial crisis also had a significant impact on Sri Lanka's banking sector. Sri Lankan banks had invested heavily in the global financial markets, and as these markets collapsed, many of these banks suffered significant losses. This led to a decline in confidence in the banking sector, which made it more difficult for Sri Lankan banks to access the capital they needed to lend to businesses and individuals. Overall, the financial crisis had a significant impact on Sri Lanka's economy, leading to a decline in economic growth and job losses. It also highlighted the need for Sri Lanka to diversify its economy and reduce its reliance on exports and foreign investment. So that's a brief overview of the 2008 financial crisis and its impact on both the United States and Sri Lanka. It's a complex and multifaceted issue, and there's much more to explore. But we hope this has given you a better understanding of what happened and why it matters.